All right, guys, let's go back to 300W. This is it's a rotation. Rotations are just predetermined levels that the market has. And in this case, it's a level from 2016. So we're going to take a look at the S&P 500. Now, not a surprise, we're going back to a level that we know. Let me just change the color here. I think this one will work. I think this will work. So we're back to a level. This is a key level because you can go and say, okay, we have 1, we have 2, and we have 3 points. 3 points, that's the trend. And we have a value trend line here that goes all the way to 3,625 points, which is part of the rotation all the way to 3,925. What happened is that it is a bearish rotation. To be neutral, we need to go back to the one that goes from 4,225 that we traded. That was one of my upside targets. It got completed. Now we are in a bearish rotation. So we need two markets to close above 3,925 to say, okay, hey, listen, we went from bearish one more time, 1, 2, actually this is 1 point here, and we're neutral, but actually we're bearish. That's the first take from this video. We are in a bearish, not to say, but nothing that you will say, oh, nothing new, JR. But honestly, it's just how you put things in perspective. This is a key level, 3,625. And what happens a lot of the times is that you have these little peaks, trap bears, put buyers, because you see that they're very active. There's a lot of selling call, a lot of people throwing the towel on Apple. But in reality, this can be a trap right there. So once again, remember, you have this break, support, and a retest of that support. So don't be surprised that we just go sideways before an attempt to go back to neutral. So that's very important to understand. The one thing is, for example, it's once we are to these extremes, for example, when I'm in these extremes, I want to buy the call, right? And when I'm in the opposite, on the extreme side, I want to buy the put. So actually, surprisingly, I would be looking to buy some calls. And I try to do that before the next CPI lecture, next CPI print, and that will be sometime October 13. So you want to play market recovery all the way heading into this. Now, this is very important to understand. We're going for one more surprise, and this is definitely the last CPI print that we go waiting for a surprise. If by the next CPI print, we don't have anything that says that we're flat or that we're moving lower, think about shelter as being the real component that's very sticky because, well, people they don't want to rent their places for free. So you have to think about that. A lot of people are expecting a crash in the US real estate market, but you have to keep in mind that it already happened. China is a different story. The US, they already are prepared. Same with understanding what's happening with Credit Suisse and potentially Deutsche Bank in Germany. The idea is the US already went through all these processes, and we already went through our crash. We already went through the mess in the banking sector. So they were kind of punished over a long decade, and that's what just happened. So we will have a reset in prices in housing in the US. But that doesn't mean that you need a crash. And remember, every time you talk about a crash, you're talking about the lives of many Americans. So your short thesis or narrative for you to make money, I mean, if you are Bill Ackman, I can understand that. But if you are a small retail trader, yeah, you're trying to protect yourself. But remember, it's fine that you're short and you must short to survive different market structure, but definitely think about the livelihood of many Americans. And also, if it goes bad in the US, think how bad it will go in emerging markets, how bad it will go in Latin America, and how bad it will go in Europe now, because the US is the one that at some point had that liquidity that kept the party going. Now, that's just basic math of what's happening out there. But remember, we're in a bearish territory, we're in extreme levels. We want to head back to neutral. We want to retake that 3,925 points. That's what matters for the markets right now. Everything that happens in between, we can go sideways. That's perfect. That will be great for the markets. And the good news here, and just to finish this video for 300W, the good news with all the story is what's happening with the US dollar index. And this is the structure I have. My structure is based on $2 and kind of 60 cent rotation. Yeah, points, $2.60. So we have a massive rejection, and if we close under 110, we can call a short-term reversal in the dollar, and that will lead, believe it or not, in a boost to equities because the markets will calm down. Remember, we are in what is an amazing run for the buck since the great financial crisis. And like it or not, the US dollar and the US stock market, they did very well after that market crash. Is it going to stop? Not really. I just need to think that we've been doing very well probably since the 87, so we need a break. But it doesn't mean that's the end of America. Continuation of this correction will take us all the way back to 109. That would be good for the euro, good for the Great British Pound, great for copper right now. It's doing very well. So I think Freeport McMoran went all the way up to 30s. We had a little bit of put, we made money, but it reversed. So we need to reorganize our month. So this is what I'm looking, and this will be an opportunity. Every time that we have a pullback in the US dollar, we had a market rally. So far, sticky bearishness is supporting a reversal in US equities, but a continuation will assure everyone an opportunity for the equity market to go back. Where do you want the stock market to go back? You want that thing to go back all the way to neutral, above 3,925. So there's money to be made to the upside. Don't forget that. And if we have one more attempt, we have a weekly candle closing under 3,625. We definitely, if that happens again, we definitely want to reassess and start looking to target 3,000. That will be our bearish target. 3,327. That will be our base case. There's a lot of guys, strategies like Michael Harnett at Bank of America. They're calling for the big round figure, which is, again, it's not new. It will be the second time that we go to that level. That wouldn't be bad either for a long-term, strong long-term support for the US stock market. But everything is based on max pain. And I think like our rotation in this area, it's really max pain. I'm just going to get that back. That will be max pain for the US stock market, and definitely a pause or slowdown in the narrative that we will see from the Federal Reserve. The other point that you have to consider as well is, again, if finally there's no reversal in CPI, at least I will consider that we need a flat. Flat will be positive for the market, and that will allow us to also have a good bullish close in the SP 500 for the month of October. Guys, that's all I have for today. I will come back tomorrow with more information. Thursday, 11 a.m. Eastern Standard Time, I will come back with my live training number 3. I will add a few ideas that I have for you guys to play with, to kind of look at the structure and where you should be looking to make money. Until then, never forget, someone always knows.